Okay, so good afternoon, everyone, to all of those people who are listening through Spotify, Apple, Google Podcasts. Good afternoon, and we are back here to tell you what happened in the market. Not only last December, actually, this customized summary where we will summarize what happened in the whole 2021, right? So, of course, before I tell you our 2022 picks, even highlighting what we think will happen with the market for 2022, or at least how we value it, let's discuss what happened in 2021. So, yeah, summary for 2021, what to watch out for in the first this month, long-term stock picks for 2022, and we will highlight a trader's playbook for transparency. Okay, so for 2021 market recap. So in 2021, the PSEI ended lower by 17 points or 0.24% to close at 7,122. If you recall, on December 31, prior to December 31, we were already up. The market was already up for the year, but after being down by over 200 points in the last trading day alone, the market ended lower pa. So we started the year from 7,139.71, went as low as 6,080.94, went as high as 7,475. Now we ended at 7,122. So now let's discuss what made the market go down and what supported the market this year. So it's pretty volatile. So let's discuss. So first, the first of the year, if you recall, we were up in the early part of the year. It was the signing of Congress approved budget extending the validity of the 2022 budget. Tapos there was this disclosure that availability of funds appropriated under the Biennial 2 Act. So that time we already hit as high as 7.3 if I'm not mistaken, right? Even I think nag 7.4 pa yata that time. But of course, if you recall, early last year, there were significant retail investor activity in the US, 'di ba? Yun yung mga Reddit, yung mga, 'di ba, si Wall Street bets, that sounded alarm bells among regulators, institutional investors, and hedge fund managers. So that affected global markets. Tapos yung Philippine GDP growth came in at 9.5%. There's this UK COVID-19 variant in Buntok. But there's also this optimism after yung sa US, 'di ba, yung democratic sweep ng, I think this was the Congress, 'di ba? So yung president mo Democrat, tapos meron siyang Congress at Democrat, so that's implementing smoother path in government policy, so that it's a bit of optimism there. But nung early as Feb, the market continued to pull back. There were delay in vaccine arrivals in the Philippines. Those were the disclosure. The rise in bond yields, US bond yields. Keep in mind, higher bond yields, diba, less incentive to invest in equities. But there were traction in the government's national vaccination plan, tapos create bills passage, diba, yung lower corporate income tax. But at this point, the market continued to go down because COVID-19 cases hit at least 4 or 5 pa that time. May imposition of curfews pa. But that time, toe-to-toe, yung bulls and bears, because for us naman, kahit mataas yung cases, merong inoculations for COVID-19 and supportive monetary and fiscal policies. But same month, the market was spooked because COVID-19 cases hit 10,000, revert to ECQ, inflation even accelerated. And then, I think that time, the market went down tuloy-tuloy until May. But as soon as the market bottomed in May, diba, because of there were GDP, diba, the market go down, GDP, down weight by an MSCI index. But if you notice at the chart, which I will show later, the market bottomed around May. Dun nag 6,080 because of positive economic data, positive remittance numbers, S&P's decision to keep the BBB plus credit rating for the Philippines. Congress even passed a 401 billion biennial 3 pandemic relief package. There were expectations of higher pace vaccine rollout. That time, diba, 38 million vaccines yung mag-arrive daw. We were already excited about that. Better economic data, like manufacturing unemployment rate, diba? All in the latter part of May and June, resulting to a sharp rally in the market. And then, nag-spill over in August because there were better than expected corporate earnings in the first half of the year, softer MECQ, implementation of alert level quarantine scheme, right? Diba, that's what we're experiencing now, or we're using now, alert level. Pilot vaccination for minors, diba? So tuloy-tuloy yung market niyan. That's when it hit 7,475, lower alert level, better than expected third quarter earnings in November. Diba? COVID-19 cases hitting below 1,000. But nung nag 7,475 tayo, the market pulled back because of the Omicron variant. diba? And hawkish US Central Bank. So we now ended at 7,122. Diba? It's good to recap what happened in the market for us to know the possible drivers and risks coming into this year. So if you take a look at the chart, yan yung buong 2021, right? There were big swings. You saw there how it bottomed in May, how it bottomed in August, diba? But for us, in terms of price action, there's a huge risk that the market can break below 7,000. In terms of our trading plan, kasi if you're still holding select index names or at least FM ETF, or you're holding mutual funds pegged to the index, continue to hold. If you're price specific, tapos hindi ka talaga, so you're not that of a long-term investor, for some reason you want to trade some index names or the index as a whole, you can set your cut loss below 6.8, right? Baka kasi pag nag below 7,000, baka maging overshoot lang siya, especially the volatility now, there's a high risk for that. But especially once the market returns above 7.2, especially 7,450, but that's definitely where the bulls will go back in control. But right now, it's a wait and see, technical analysis perspective. So it's good to analyze all aspects right now, especially the high volatility. So what do you watch out for the rest of the month? Again, Omicron variant and its implication, the number of cases and lockdown measures in the country, diba? Will reproduction continue to subside? But right now, the question is, will reproduction number continue to rise? And if you ask me, a lot of experts are saying that cases can even go higher than what we had last August or September, diba, 20,000. And I'm not going to be surprised personally, because if you saw what happened sa US, Europe, vaccinated naman sila, but the cases continue to rise, even hitting record high, but the deaths are not as high as before. Okay, of course, this is still a tragic scenario, but looking at when it will peak, I will show you slides later. It seems like the Omicron variant is less severe, and it is more transmissible, less severe. I showed you that last month. In terms of economic data, manufacturing data came in yesterday, which is better than the previous month. Inflation to watch out for tomorrow, oil remittances, and we have GDP already on the 28th. There's also central bank interest rate decision on the 27th for US, something a big must watch yan. Jobs report on Friday, inflation January 12, GDP January 27. And then for global, Japan central bank interest rate decision on the 18th, EU GDP on the 31st. COVID-19 vaccine related news still a much watch, oil prices and global inflation pa rin, okay? So of course, I'll just like what I mentioned earlier, I will state our year end later, and we already published that on our website, okay? Of course, I'm not yet sure if we will have this, separate big event. We will dig in talaga yung outlook namin for the year, and we will probably invite other speakers. But for now, I'll mention to you what we think, yung namin year-end forecast, right? But in terms of Omicron variant, we know its effect. It's more transmissible, less severe. But let's use yung kung saan daw source, diba? South Africa, some saying Europe. But let's see one example where the Omicron variant was one of the first seen. So sa South Africa, diba, like I think 1 month ago or 2 months ago, dun siya nahanap. But right now, I'm stating is notable sources, mga reputable ones, BBC, Washington Post. And if you take a look, South Africa says that Omicron wave may have peaked. Omicron has past peak in South Africa, few deaths and hospitalizations. And I'm not just going to state headlines, okay? For those who are listening to our podcast, on this slide, I'm showing to you the confirmed coronavirus cases in South Africa since January 2020. And in this chart, you will see that South Africa cases, mas mataas yung cases because of this Omicron variant. But if you take a look at the chart closely, it quickly peaked. If you see the span of the rally of cases, of the surge in cases, it was quicker compared to the Delta, compared to the first variant, right? It quickly peaked. And moving on to the next slide, I'm showing to you guys that South Africa, ang bilis nag-peak ng cases, right? But if you take a look at Philippines, mas marami pang fully vaccinated. In terms of percentage population, I'm showing you South Africa 26.8% fully vaccinated, Philippines 45% fully vaccinated. So what I'm trying to say here is, even if cases rise, which a lot of people are expecting, even could hit 20,000, 40,000, I'm not going to be surprised. I hope everyone's going to take care of themselves. But in terms of the number of cases, even if it does reach 20,000, 40,000, I believe it will quickly peak. it will quickly go down, especially a lot of us are fully vaccinated already. And if you ask me personally, I like what the government's saying na yung mga unvaccinated, you stay home first, especially as of course except if essential ang gagawin to limit hospitalization. Okay? So that's the bottom line here. So of course a lot of people are asking what the market will do or will go to, especially if tumaas yung cases. I think the market can go down, but just like the cases, I think the cases will quickly peak, but the market will quickly bottom. Okay, that's what we think. So in terms of our stock picks for this year, I will state all of our top picks. Okay, so some of you may have already know our picks, even yung other buy picks namin, but what I will mention here are only our top picks for the year. We have a lot of buy picks, but I will only mention our top picks. So first is the property sector. Our current target price for Ayala Land is 52 pesos. So we have, compared to the previous slides, which you might have noticed, Ayala Land, we tweaked it a bit on this one in terms of why we like Ayala Land. So it's good to remind ourselves that our view for 2022 is still prefer reopening winners, especially index glamour names. And this is one that hits both criteria. Ayala Land. Ayala Land is still the leader in the Philippine residential market. Ayala Land is in an advantageous position to capture the rise in momentum in pre-sales growth. Moreover, having construction ownership means more operating leverage, especially as demand for housing appears robust. Ayala Land is also the second largest mall developer, right? And the key growth source for property names are use of malls, especially yung malls have not yet fully rebounded nung 2021, right? So we expect further relaxation of quarantine measures, especially after mag-peak yung Omicron variant, that could improve mobility and see a shift in consumer spending back to stores. So that's for Ayala Land. Next is SM Prime Holdings. We have a current target price of 48. So we're seeing higher mix of tenants under variable rental rates. So based on our channel checks, while the ECM restrictions has allowed footfall to recover to 50% of pre-pandemic levels, the rebound in tenancies has been more pronounced. If you take a look at what we're seeing here, is tenants already generated up to 60 to 70% of pre-COVID level sales. So we expect that to further rebound this year. Our target price for SMPH is 48. For Robitus's Land, our target price is 30 pesos. Okay? So RLC benefits from stable office leasing, especially given its exposure in the BPO sector, where outlook is on better footing and robust demand and tight supply. The interesting thing for all RLC and also Ayala Land, diba? Yung REIT listing will unlock the company's office valuation. So RCR is set to be the Philippines' biggest REIT post-infusion of identified assets in the next 1 to 2 years. So we're positive on the office space, especially for the REITs. Okay, so based on our forecast, just to mention, RCR is currently trading at 5.1% yield. So that's good if you want to invest in REITs. That could something for you to consider. But for us, we still prefer the reopening winners for higher upside, and our target price for RLC is 30 pesos. So moving on to the consumer sector, one of our top picks, actually this is one of our newer ones, is the Jollibee. We have a target price of 281. For Jollibee, it's more on improving store economics, okay? We have not been positive for Jollibee for the past years kasi we were thinking mabagal yung recovery ng Smashburger and CBTL. But for now, gains from these companies as well as the business transformation program lays out a clear path to profitability. So this is also a reopening winner definitely because we expect a stronger top line recovery, especially for the Philippines-based stores which have been, volatile in terms of yung reopening tapos yung magsasara because of quarantine measures and the like. So our target price for Jollibee is 281. For FB, our target price is 115. So we are seeing resilient alcoholic beverage volumes despite fluid rules on social gatherings. We're seeing curfew liquor bans claw back faster than so far assumed, so especially once mag-alert level 2 agad, diba? It's a quick recovery for them. We are also seeing favorable operating environment for the food business in the next 12 months. So our target price for FB is 115. For RHI, it's a stock that has been trying to rebound after being stuck at 50 pesos, 50 levels for so long. And we still see more upside to that one. Our target price for RHI is 83. So definitely RHI can leverage the wallet share shift and return of mobility. If you listen to our podcast regarding the consumer sector in the middle of the year, we were We were expecting yung return of mobility to be paramount for pent-up demand to flow through. Okay, so RHI is also awash with cash. So something to consider. So for the banks, this is one of our new picks, diba? See, Security Bank, our target price is 150. In recent years, SecB has transformed into a more balanced bank along core business lines, wholesale banking, retail banking, and financial markets. Given SecB's size and niche market exposure, we view the bank to be well positioned to capture lending opportunities as the economy further reopens. The upside will come from a rebound in retail banking, and for some of you may know, in retail banking sector of the banks usually yields higher margins. So that's for SecBs. And of course, some of you may know that our picks are still BDO and BPI for the other banks. So just to mention, our new target price for BDO is 183. For BPI, it's 111. So in this slide, supposedly our pick is also SM. Or si SM, we have a target price of 1,265. Okay, so for our year and forecast, we just published this earlier, January 4, and our title, Stronger, Faster Recovery, is about to unfold. So we have a target price for PSCI by year end of 8,700. For a year forecast, it's 8,700. So for us, let's try to zoom in para mas makita nyo for those who are watching this slide. So for us, constructive economic fundamentals and higher vaccination rates is a path to a more sustainable recovery. Okay, so we highlight that the key economic drivers remain intact coming out of the crisis, and then laying a foundation for the strength and pace of recovery given healthy household balance sheets, capex cycle gaining strength, and ample system liquidity. Okay, there's also this boost in demand, especially mag-election year, which can provide tailwinds to growth. Against Fed taper and rising bond yields, the skew for multiples is to head lower. Okay, we expect robust earnings growth, higher rates equal to lower equity risk premium, as it implies that recovery is materializing. So moving on to the next slide, this elaborates further why we think that economic drivers are intact. So we mentioned some of this sa consumer presentation, diba? Yung purchasing power of households, support of faster snapback in demand. I would like to focus on the Philippine capex cycle. So we expect the recovery of gross fixed capital formation activities to gain strength and provide tailwinds to economic recovery. So usually kasi when companies increase their capital expenditure or their budget for the year, it means they're now more confident moving forward in terms of expanding. So that's what we're seeing. And it's still notable that the country's COVID-19 situation has improved significantly. Of course, if you take a look at cases alone, medyo volatile siya. But if you take a look at yung capacity ng healthcare, it really has improved. That's why we're more prepared. We also mentioning that it is an election year. While there's still uncertainty in terms of the context of the election outcome, we should look back over the 3 decades of economic performance, which we have observed that the economy tends to grow faster during the period of election. And we expect that this year should not be any different. Okay, so that could be a boost for the economy and the market. So these are our buy picks, diba? So we mentioned to you our top picks. This is our main buy picks. And as of December 31, ito yung upside. Okay, so for those who are listening to Spotify or Apple or Google, for example, this is the share price is as of December 31. So for SM, we have an upside of 34%, for Ayala Land 41%, SMPH also 41%, RLC 56%, Meg FB 61%, RHI 26%, BDO 51%, BPI 20%, SecB 26%, Monday 41%, Converge 28%, TEL 25%, GFC 29%, RCR somewhat of a downside na negative 1%, PhilREIT 4%, MREIT 6.6%. So this is our model port. PSCI down by 0.2%. In terms of our stock picks last year, it's slightly underperforming in terms of equal weight, down by 0.8%, right? But now we have more picks, we have more growth prospects. We're hoping we could outperform the market next year. In terms of traders playbook, we have a 70.1 hit ratio. And if you take a look at yung average year-to-date average performance niya, 7% up compared to PSI being down by 0.2%. So that's good, diba? So congratulations for those who followed our recommendations in Traders Playbook. So, okay, there. So of course, for those who are listening to our podcast, thank you for listening. We had a strong growth this year in terms of followers, diba? 365% up Yung listeners namin up by 188%. So please continue to follow our Philippine Stock Market Weekly podcast sa Spotify, Google, Apple. Okay. So we uploaded last month. We interviewed Semirara Corp. So Semirara Mining Power Corp. So please listen to that. We also interviewed AC Energy, Nickel Asia months ago. So there. So now we open the floor to questions. So we'll give you guys 2 minutes to gather your questions. So okay, let's start answering your questions. Okay, the first question is what factors can push the PSA beyond the 7375 resistance? Can it break this very strong resistance as early as Feb? Well, that's highly dependent on the number of cases, but we think it will, as long as assuming matapos na yung Omicron variant, nag-peak na yung cases, tapos bumaba ulit yung alert level, which we think will quickly happen. The market can definitely push beyond the 7.5 resistance. Okay, as long as wala ng ibang variant, and as long as election related will not be a big issue, that can definitely happen. Especially yung hinintay lang ng market investors right now is the sustainable reopening. Yung Omicron lang pushed us back a bit, but we think it will not push us longer. So definitely the market can go beyond the 7.5 resistance. Basta mag-reopen lang further. Yeah. The next question is how about Meg? Yeah, we mentioned last December that Mega World is a buy pick of ours. We have a target price of 5.10 for that for Meg. It's just that it's not our top pick. We prefer the ones that are more exposed sa mga the bigger cap names and the ones that have bigger exposure sa malls, which we see having a higher upside. Kasi si Mega World, although exposure in all segments, a big part of its earnings comes from the office side. And while we expect that to be stable, even positive growth for this year, in terms of upside, we see higher growth from SMPH or Ali RLC. So there, it's a good question. What stock do you think will be included in the PSI rebalancing next month? We think Monday will be added. It's a buy pick of ours. It's not necessarily top pick, but it's a buy pick of ours. We have a target price of 21 pesos for that. We think Monday will be added next month. It's a high probability for us na ma-add si Monday. So in terms of who will get removed, I have to recompute that in the latter part of the month or even early next month. But baka si Bloom right now. But we'll see. But in terms of I'm more certain that Monday will be added rather than who will get removed. So basta it's more important since we're a buy market naman. It's good to take advantage of Monday recent dips because it will get added sa PSEI. Okay. So next is what's your take on DNL? Will it deliver strong earnings for the fourth quarter? Is it the buy at current levels? Yeah, the recent dip is something to take advantage of for DNL. For DNL, ano rin siya, somewhat of a reopening play, especially as restaurants open. Tapos, it's also a beneficiary of health related products because it also produces those or it helps produce those. We expect a strong recovery also for DNL. Of course, it already recovered. I think the earnings niya poised to already beat the 2019 levels. So, it's actually pre-COVID levels already. So, it's an outperformer, something to take advantage of on dips. Okay, another good question. Is there a big chance RCR will have the same price action for ADIT last year? Well, I'm not going to describe that as impossible because I think it's possible. Probably, baka looking at it now, improbable siya. But the upside is there. The upside is there because the story why ADIT rallied last year was because of the infusion of assets. And that's what MRIT and RCR are planning to do in the coming years. So I'm not going to take that out of the possibility. It's definitely possible. Okay, what's our view regarding sectors for renewables and mining for the year? Definitely in terms of renewables, looking at the sector as a whole muna, definitely the growth will be there. In the next 5 years kasi over 60% of capacity will be renewables as of now. Definitely yung renewables sector will further grow in the coming years. In terms of the stocks, baka some of those have been priced in already. For AC Energy, definitely earnings will definitely improve pa further. In terms of valuations lang, probably it's relatively expensive, but the growth is there. The growth is there. Ano lang, if you ask me, just expect the stock. Right now, looking at it right now, the stock will likely, pwede siya umakyat, but I think compared to the other power-related names which have been battered the past couple of years, probably underperform si AC Energy. Share price, but earnings growth, it's definitely there. So, there. Well, okay, the question here is, do you advise selling our stocks for now and then buy back when PSI goes lower? Well, I don't, if you're a long-term investor kasi, usually, assuming you don't have any cash anymore, try to sell a bit yung mga stocks na hindi reopening winners, and then you wait for the PSI to go lower. If it goes lower, and then take advantage of the dips, like what we're seeing right now. Okay, so yun yung advice, but I don't recommend selling all tapos buy back when lower, kasi while the probability is bababa yung market, it's not that recommended kasi nga in taxes, etc. So baka matalo ka pa dun. Okay, what are your thoughts on those energy companies using coal plants? So it depends. It depends. That's why it's good to know yung mga. It's good to look at our reports, right? Kasi we're mentioning there, okay, for example, Aboitiz Power, Semirara, they own coal plants. But for example, si AP, meron siyang goal na 50-50 renewables, thermal/coal allocation by the end of this decade. So that's good. Kasi while meron siyang coal plants, plan niya sa renewables siya mag-expand. So at least yung growth prospects niya is still positive. Okay? So it depends. For SCC, they have yet to disclose their plans. Diba? We asked that sa podcast with Miss Levina, attorney, not attorney, with Miss Levina. So yeah, it's good to cite that. It's good to listen to that kung ano yung outlook nila moving forward. Another question is, what's the reason behind Emirates' recent rally? I think it's because they disclosed that they will already infuse assets. That's it. So it could be an AREIT-like rally, but for now it's warranted, meaning it makes sense na nagra-rally si Emirates. Okay, so what else? Yeah, for SPNEC naman. Yeah, for SPNEC, definitely it's a company that has a lot of potential to grow. Well, of course, yung usual issue lang naman, usually pag bago ka listed, it's your valuations, which that's one of SPNEC's reason right now. That's why not a lot of big companies or institutional companies are buying into SPNEC, because I think it's worth 8 billion pesos yung valuation niya. You're seeing other power companies that are already earning, or at least dyan yung prospects nila, but have lower valuation. So yeah, for SPNEC, definitely the prospects are there. It's just that I think it's best to not have a significant high allocation to SPNEC kasi it can quickly go down once the market goes down. Especially yung mga tinatarget profit take dyan once the market goes down, yung mga high valuation stocks. So you have to be careful. Okay, so good question. MPI has been a laggard for too long, despite the buy recommendation of most analysts. Yeah, that's correct. Should we buy more and take advantage of current price? Well, if you have a big allocation to MPI, not anymore. Yung MPI, it deserves an allocation to your portfolio, but dapat you have a certain limit, and para ma-take advantage mo yung mga other stocks that that are you see moving and you see that they're laggard also. So MPI talaga definitely undervalued. But you saw a lot of undervalued stocks there that have not yet moved. So that's a good example to watch. But for MPI, definitely there's a value. It's just that if you have a high allocation to MPI already, portfolio management speaking, diba, dapat diversify mo na muna. So answering the last question, how about AC and Exor, ASEX, what will happen after suspension? Well, it's more of a transaction naman that was already announced months ago or weeks ago. Best case, baka may knee-jerk reaction siya na umakyat, but I think it's already been partially priced in. Okay. For AC Energy, good to, okay yung prospects moving forward, especially that the management is Ayala, proven, diba? You saw what happened to AC Energy. I think AC and Exor, diba, has a lot of potential also. to answer your question, what will happen after suspension? I think the deal has been announced na already. It's just that ano lang siya, parang regulatory wise, it has to be suspended until it announces fully yung transaction, the deals, right? So there. So yeah, so thank you. Thank you everyone. Heads up, we will publish more sector reports on our platform in the coming days. So please watch out for that, for you to be aware of our outlook for 2022 for each sector. Okay, so thank you and have a great week ahead. So this has been Royce Aguilar, First Metro Securities. As always, in First Metro Securities, it's hashtag your future first. So thank you.